Hello everyone. We know that our dealers are essential to ensure home and commercial access systems remain functional and safe in this unprecedented time, and we're here to help any way we can. My name's Ben Coleman and I'm a member of the LiftMaster Finance organization, and I wanted to share some of the information about government relief programs that have been put in place to help business owners like yourself related to the coronavirus pandemic.
As we've all seen firsthand, coronavirus has turned the world upside down. Beyond the devastating health impacts it's had on people's lives, it's also had a major negative economic effect. In response, the federal government has passed a series of relief packages in 3 different phases. Phase 1 was passed on March 5th, and it opened up funding for various agencies responding to the pandemic. Phase 2, the Family First Coronavirus Response Act, or FFCRA, as you'll often hear it called, was signed on March 18th, with the primary outcome being expanded paid sick leave and FMLA requirements for employers. Phase 3, known as the CARES Act, was signed on March 27th and is a whopping $2.2 trillion package, which includes relief for both individuals and for companies. Today's discussion, however, is going to focus on Phase 2 and 3, and specifically how they affect businesses like yours. Before we jump into the details, I do want to share a few very important caveats. While we've made every effort to include information that is currently up to date, each agency is continuously rolling out new guidance and interpretations of the law, so the landscape is ever changing, and I'd encourage you to go out to some of the links that are provided frequently to see how things could affect your specific situation. Also, this presentation is intended to provide a general overview of the various programs that we hope you may find useful, but such information should not be relied on as accounting, business, financial, investment, legal, and/or tax advice. You should work with your advisors to make sure the individual facts and circumstances of your business are considered when choosing which program may be available to you. As part of this presentation, we're going to walk through a number of these programs in greater detail, but I did want to take a minute and provide an overview of some of the other programs that are available to just raise awareness. In addition to the federal loan programs, each individual state is rolling out its own programs to help businesses. So I'd recommend going out to your state's Treasury webpage, taking a look there to see if any of those apply to you. If you won't qualify for some of the small business loans that we're going to talk about, there is a separate medium-sized business relief program being rolled out. And although the details are still being released and developed, in general, it's important to note that they will likely contain more restrictions than the SBA loans. 2019 federal tax returns are now due July 15th. Instead of the normal April 15th deadline. As part of the legislation, they did relax net operating loss rules. And the 2 provisions there is that you can now carry back NOLs that arise after 2017 for up to 5 years. And the 80% limitation on NOLs has been temporarily removed. And then lastly, you can now deduct up to 50% of interest expense against adjusted taxable income versus the previous cap of 30%. So again, that was very quick, but just to provide awareness around some of those additional relief programs. And now we're going to jump into the more detailed programs. The program that is creating the most buzz for small businesses is the Paycheck Protection Program. And it's creating all this buzz because the loan can be forgivable. These are loans available to eligible small businesses, which generally are those that are 500 or less employees, but also include certain franchises that qualify. The 500 employee threshold does include affiliates, which as of now prohibits a lot of venture capital and private equity-backed companies from participating. Although there's been a lot of discussion around this provision, so ultimately it may change. As I mentioned, the most attractive feature of this program is that the loan amount is forgivable if used for eligible costs, which include payroll below $100,000 per employee, mortgage interest, rent, and utilities. One important caveat is that at least 75% of the forgivable amount must be used for payroll costs. The other condition of the loan being forgivable is you must maintain employee headcount and not drop their compensation by more than 25%. Otherwise, the forgivable amount may be reduced. However, if you've already taken this action and can restore employee and compensation levels to where they were as of February 15th, by June 30th, then you are still eligible for loan forgiveness. The amount you are eligible for is calculated by taking your average monthly eligible payroll and multiplying it by 2.5x, but it's capped at $10 million. In terms of the process, I recommend reaching out to your existing lender to see if they are participating in the program, as this will likely be the most efficient way to get the loan processed. If they aren't participating, then you can find a list of eligible lenders on the SBA site. Applications have been accepted since April 3rd for businesses, but a number of banks have struggled to get their programs operational given the fluidity of the guidance coming out, so just be mindful of that. Applications for independent contractors and self-employed individuals begins April 10th. You can submit an application through June 30th, but recommend doing so as quickly as possible, as the loans are on a first come, first served basis. There is already conversation around adding additional funding to this program given its popularity, but nonetheless, if you choose to apply, the sooner the better. One of the commonly frequently asked questions around the loan program is which documents are needed in order to apply for the loan. So we've included in this presentation a checklist of some of the documents that are often necessary. This can be a good reference guide, but another avenue is just to talk with your banker and figure out exactly what is needed for your specific instance. The CARES Act also expanded the Economic Injury and Disaster Loan Program. Unlike the Paycheck Protection Loan, this is not forgivable, but can be used on a wider variety of costs. For example, mortgage payments, accounts payable, or other bills that you otherwise would not have been able to pay because of the pandemic. You can get both a PPP loan and an EIDL, but you cannot double dip and use the loans to cover the same costs. One of the attractive benefits is you can get an upfront $10,000 grant payment ahead of the loan being processed to be used as emergency funding for your business. And this amount does not need to be paid back even if you don't get the loan. If you do both the EIDL and the PPP loan, then the $10K will net against the forgivable amount under the PPP. The loan calculation is not as mathematical as that of the PPP, but it's based on the economic injury suffered and is determined on a case-by-case basis as part of the application. The applications for this loan are currently being accepted by the SBA. We've also included a link which compares the EIDL loan with the Paycheck Protection Loan, and it can be useful for capturing the nuances between the two programs. Next up is the Employee Retention Credit Program. This program is intended to help companies keep employees employed despite the headwinds created by the coronavirus. For this program, there are no size constraints, so companies only need to satisfy one of two criteria. Either one, they're fully or partially shut down by a government order, such as a shelter-in-place order, or two, their gross receipts go down by at least 50% for a quarter when compared to the same period last year. If you qualify for this program, you can be reimbursed for 50% of the first $10,000 in compensation you pay an eligible employee. This effectively results in a $5,000 cap per employee. The subset of eligible employees depends on the size of the company. For those with 100 employees or fewer, all employees are covered for reimbursement. For those with more than 100 employees, only the employees that are not providing any service, so those that are not working but continuing to get paid, are covered. The reimbursement manifests itself in the form of a payroll tax credit for the employer's share of Social Security tax. So it is recommended that you work with your payroll team or provider to make sure they know you are electing this credit and can adequately track it. Also of note, if you participate in the forgivable loan portion of the paycheck program, then you are ineligible for this credit. Moving along to the next slide, to help with cash flow management, the employer share of Social Security tax from March 27th through the end of the year can be deferred. Ultimately, this payment will come due, but 50% will be owed December 31st of 2021, and the other 50% will be due December 31st of 2022. If you choose to elect this benefit, again, work with your payroll team so they know to hold off on processing the payment to the IRS. And once again, it's important to call out that if you elect the Paycheck Protection Program, you are ineligible for this deferral. The last topic is both an obligation of the employer, but also a benefit in that they are reimbursed for the amounts paid. Under the FFCRA, companies that have 500 or fewer employees must provide those employees paid sick leave and FMLA for COVID-related reasons that are outlined in the law. Companies that are under 50 employees, however, can be exempt if they meet certain criteria. All amounts paid for eligible sick leave and FMLA under this law will be reimbursed from the governments through tax credits, assuming they are properly documented. For this reason, if you meet the criteria, I'd recommend reaching out to your legal counsel to ensure compliance, as well as working with your payroll team to make sure that you have the right processes in place to effectively track amounts and seek reimbursement. The mechanics of the implementation of this program are fairly complex, but the referenced FAQ document in these materials does a pretty good job of outlining various scenarios, so I'd encourage you to check that out. We've included reference links in this presentation to help you navigate the complex legislation. To quickly summarize what we've covered, we first talked about the Paycheck Protection Program, which provides small businesses with a forgivable loan. The EIDL is another loan program that is available to small businesses, and while it's not forgivable, it can cover costs that may not be eligible under the PPP. Employee retention credits provide an incentive to keep employees employed, although they may not be able to provide services. And the payroll tax deferral provides a cash management lever to postpone paying taxes that would otherwise be due. Finally, we discussed the FFCRA, which requires paid sick leave and FMLA related to coronavirus for certain companies, but also reimburses those companies for the eligible time taken. To close out, I wanted to say thank you for your participation, and we at LiftMaster wish you the best of luck during these very challenging times.